The U.S. stock market has been on a roller coaster ride in recent days, experiencing dramatic swings fueled by President Trump's aggressive tariff pronouncements. The S&P 500, a key indicator of the market's health, briefly tumbled into bear market territory, signifying a drop of more than 20% from its recent peak. While it managed to claw back some losses, the Dow Jones Industrial Average wasn't as fortunate, ending the week with a significant decline. Adding to the confusion, a false report suggesting a potential pause in the tariff war briefly sent the market soaring before reality set in, and the gains evaporated. This volatility underscores the immense uncertainty and anxiety gripping investors as they grapple with the potential fallout from a full-blown trade war. The tech-heavy Nasdaq, however, has remained surprisingly resilient amidst the turmoil, even registering a slight gain. This anomaly suggests that investors are seeking refuge in the perceived stability of the tech sector, which has historically been less susceptible to the whims of global trade disputes. However, the overall market sentiment remains decidedly bearish, with fears mounting that Trump's tariff blitzkrieg could derail the global economy and usher in a period of stagflation, characterized by stagnant growth and soaring inflation. The coming weeks will be critical in determining whether cooler heads prevail or if the world is indeed headed for a trade war of epic proportions. President Trump's decision to escalate the trade war has sent shockwaves through the global economy and drawn sharp criticism from economists and business leaders alike. Trump, however, remains undeterred, insisting that his aggressive tactics are necessary to protect American jobs and reduce the trade deficit. At the heart of Trump's strategy lies a deeply held belief that the United States has been taken advantage of in trade deals for decades. He argues that countries like China have engaged in unfair trade practices, such as intellectual property theft and currency manipulation, giving them an unfair advantage over American businesses. To counter these perceived injustices, Trump has imposed tariffs on billions of dollars worth of goods imported from China and other trading partners. These tariffs are essentially taxes on imported goods, making them more expensive for American consumers and businesses. The goal, according to Trump, is to force these countries to the negotiating table and extract concessions that will benefit the U.S. economy. Critics, however, argue that Trump's tariffs are a blunt instrument that will ultimately harm the very people he claims to be protecting. They contend that the tariffs will raise prices for consumers, hurt American businesses that rely on imported goods, and invite retaliation from trading partners, leading to a downward spiral in global trade. The escalating trade war has not only roiled U.S. markets, but also sent ripples of uncertainty throughout the global economy. Major stock indices around the world have tumbled as investors fret over the potential for a protracted trade war that could undermine global growth. China, the primary target of Trump's tariffs, has responded in kind, slapping tariffs on billions of dollars worth of American goods. This tit-for-tat exchange of tariffs has raised the specter of a full-blown trade war that could have devastating consequences for both economies and the world. Adding to the chorus of concern, prominent economists and business leaders have issued stark warnings about the potential fallout from a prolonged trade war. Jamie Dimon, the CEO of J.P. Morgan Chase, one of the world's largest banks, cautioned that the tariffs could lead to higher inflation, slower economic growth, and increased unemployment. Dimon's concerns are echoed by many economists who argue that tariffs are a drag on economic growth. They point out that tariffs disrupt global supply chains, raise costs for businesses and consumers, and reduce economic efficiency. Moreover, they argue that tariffs are ultimately self-defeating, as they harm the very consumers they are intended to protect. As the trade war escalates, the future of the global economy hangs in the balance. While both the US and China have signaled a willingness to negotiate, the path forward remains fraught with uncertainty. Trump, known for his unpredictable negotiating style, has oscillated between threats of further tariffs and offers to restart talks. This erratic approach has left businesses and investors alike guessing about his true intentions, further fueling market volatility. Adding to the complexity, the economic data paints a mixed picture. While the U.S. economy has shown signs of strength in recent months, some indicators, such as falling oil and food prices, suggest that global growth may be slowing. This economic uncertainty makes it even more difficult to predict the long-term impact of the trade war. The coming weeks and months will be critical in determining whether the trade war escalates further or whether cooler heads prevail. The stakes are high, with the potential for both significant economic harm and a fundamental reshaping of global trade relations. The world is watching and waiting anxiously to see what the future holds.